The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, first trading day of May, the month of April is finished, and what ugly candles we're looking at here. And let's just go through these things one at a time. Dow's down 57 at 32,913. Now, after the kind of smash we had on Friday, you would anticipate with margin calls and all that between 10, what is it, like early-ish in the morning, first hour or so, you get margin calls, etc. So some of that selling could precipitate even lower prices. But this is a very crucial day because most of the time after big red candles as we've had, you follow up with a bit of a green candle and then maybe start to pull back again. Even more important than that, what we're really looking at is within the context of patterns. If you're looking at the arch formation, in this case, in the Chapman wave, we're looking at a couple of patterns. Let's just show you these patterns here. So we've got straight up, straight down. That's a straight line move. Then you get a cup formation. Then you get an arch formation. You can mix 1 and 2 or 1 and 3. In this case, 1 and 3 is the dreaded H, where it makes an arch formation like this, single leg up A, and fails and takes out the left side low. Big problem with that is if it takes out the left side low, it can go a lot lower. And on the right, you've got upside. You're seeing this in bonds. You're seeing this in bond yields, I should say, as left side high gets taken out after a brief pause, and it goes even higher. So 3 patterns, straight line, cup, or arch. That's number 1. The other thing I'll just mention for those of you new to my work here at TFNN, I try to identify the lowest low bar. You get higher peaks, you alphabetize them sequentially, A, B, C, D, E, F, G. There's never an H. You have to assess what's going on after peak D to see where you are. D is at the 4th highest peak is where other things can happen. That's really important. And then we look at particular patterns. So within this pattern, look on the left side. You had a cup formation. It went to a slightly higher high. I had shown that the strong technicals on that rally to 35,372 late March, pulling back, and then in late April, going to 35,492, the vertical line. I call it the vertical test. And look at that vertical test. It was much, much weaker. Now we've pulled back. Now are we going to get a vertical test on the downside? Well, we haven't yet gotten to either 32,575, today's young, 32,575 low that was made early in March, and then the very beginning of March, or was it April, end of April, we went to end of February, we went to 32,272, I think it's February the 24th. So these are levels on the down. That's why I was saying in the preamble that in the assessment, with all this terrible negativity, all you've done is been in a trading range. Well, as I said to subscribers to my opening call in my Saturday video for the overview, this is where you've got to be really careful, because you see this candle here, the serious red candle from Friday. Well, that happened to be the very end of the month. Well, that very end of the month still held above the previous low. That was the low of 32,575 back in March, and it made a new recovery high. So you had a higher low and a higher high. Well, all of a sudden we've taken out a low from Friday, the low that was the low of the month so far, and we've gone to a lower low so far. The low today is 32,792, and we're down 120 in the Dow. This is a very important moment, because if instead of having the usual bounce, we go down even deeper, I would say we could keep going down until maybe the middle of the week, somewhere in Wednesday or Thursday, and that's where we could, in fact, maybe get a much, much better upside action by getting extremely oversold. And that means right now what I need to do is to look at the Where am I typing there? Let me see if I'm typing in the wrong. There it is. The volatility index. And the VIX index right now is up in leg D in the Chapman wave methodology. This is called the Chapman wave inside wedge. Green. Let me make it green. Let me make it dash because that's what I always do. This is the inside wedge target resistance line. And it has a left side high, not the high that was made at 37.79 back in Feb, but the March 8th high of 37.52. I may as well type that in, 37.52. As a potential target this week, if, and this is leg D. Now, I don't usually use the Chapman wave notations as a real benchmark in the VIX. It's the only index that I don't use it because it's an emotional one. And this can say, I can go to a single leg A up and then fail. It doesn't have to go to a D. And that A can be going from the 19s to the 30s or 40s. So it's something completely different. However, it does seem to correspond beautifully in this particular case to the cup formation, the left side, right side price time match. Let me just draw this in here. This is the low that you'd have to use. I think that's the low right there. Yep, there it is. And that says, no, it's this low right here. One bar later, there it is. And that says that based on this particular methodology, we could go to, there it is. And we could go to somewhere around the 5th of May. 5th of May is probably a Saturday. Yes, 5th of May is a Thursday. So we could go to later in the week before we hit that level. Could do it any time before that. But that would be the measured move. That's really not what I'm looking at right now. What I'm looking at right now is that the buying pressure based on the MACD and the slow stochastic at 85% is pretty intense. And it's continued intense because of Friday's action where it didn't even close at the high, even though the markets closed at their lows. So this is kind of follow through selling pressure. And as long as you've got selling pressure at 35.29, to tell you the truth, the Dow should be down 380 points or more at this particular time with selling pressure so high. I'm not saying it's a good thing right now. The day is young. We're not even an hour into the session. So this selling pressure has continued, and that's going to be really important. It isn't that. If I look at this, if I go to United, it was mentioned in the den just a moment ago. United Health Group, Managed Healthcare, is at 506.57, down 2. It made an all-time high on the 14th of 553.29. So it's down almost 10%. Not the issue. This has been a spectacular winner, going from below 200 to the 550s, and now it's pulling back. And what I'd say to subscribers, my concern here is now that now even leadership is starting to fail. And leadership has been in the S&P Select Staples Spider Fund, which is down 47 cents after making an 81.34 peak F high in the daily chart, peak D in the weekly chart, and a leg E. It's only a leg. We have to wait for the full month of May to see if it's going to break 81.34. But when you see leadership like this start to collapse, I get a little bit worried. There's something else I'm going to talk about. So raised tremendous amount of cash for us. Subscribe to my opening call.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Want What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. This is the Monday edition, the first trading day of May, the 2nd of May. And we're looking at the Dow down just 4, S&P down 6. And one of the things that I was talking about when I said to subscribe to my opening call over the weekend in my what, it was almost an hour long, I believe, a video based on all the things that are going wrong rather than all the ones that are going right. Look, CVX, which has been Chevron Corporation, multinational, it's just been a fantastic winner for those in the oil sector. And then all of a sudden, what you get is this rectangle formation with a pattern I call the large rectangle that goes from, in a flag pattern, goes from a high straight down, and then it starts to make higher highs and higher lows, which says that there could be at least four higher peaks going to just under, or just above the previous major high, and then be careful. Well, what did it do? 174.76 was the high on the 10th of March, and it goes to 174.54. 23 cents away from making a new all-time high. Peak E in the double peak E in the daily, a peak E in the weekly, and a leg D in the monthly. And that just says to me, even though oil is still in play and having a high-level consolidation, that digestive phase that I was talking about is unfolding. And if it's unfolding in the leader of the multinationals, if you look at Exxon, you'll see the same sort of thing. It went to 91.51, 8th of April, and the last move was just about 90, so just less than about $1.50 from the high, all-time high. And then it pulls back. I said all-time high. I got to be careful. I don't know if it was an all-time high. No, all-time high was 104.76 back in July of 2012 at a peak E in the Chapman wave methodology. So what we're looking at here is this consolidation has continued, and as it's continued, stocks that were just unbelievable, like a GIS, General Mills, trading unchanged today at 70.74, makes an all-time high. Makes a high just under 74 a week and a half ago, and look at this. I can go all the way back to July of 2016, 72.95. these rectangle cup, lopsided cup, gravy cup patterns are just quite amazing. How the magnet of that previous high, when they become in favor once more, can take you all the way back. If they break out significantly above, that's very important on a closing basis, certainly on the longer term charts. So here we are. I'm saying that even the sectors, Johnson & Johnson, defensive, not defense, but defensive sectors, defensive sectors have been making higher highs with weaker technicals, and therefore they could just have a digestive phase here. Johnson & Johnson, healthcare again, and drug manufacturer. So this is very important. So here I am. I'm looking at this, and I'm saying, okay, well, go to your... Have I finished doing? No, I haven't finished all that stuff. Just wanted to double check that because I did it for the update. Gold is gone. Remember, I had this discussion, I think it was last Wednesday or Thursday with John in Philly. We were looking at the different charts, and I said that gold has acted. My target was at least the 200-period moving average of 1865. It went just above it and had a nice bounce. But then we were looking at the GDX, the gold miners, and we were looking at the GDXJ, the gold miner, the junior gold miners. And I said, I have a particular methodology that I always use for gaps. And this has taken the GDX, especially GDXJ, the junior, has especially done the exact opposite. And therefore, closing the gap is absolutely imperative in this particular chart pattern. Otherwise, it's just losing strength. So the high of the 26th of April in the GDX, that is the GDX Gold Miners Market Vectors ETF, high was 3601. Oops, sorry, the date, no, it was 3617. The previous day was, the low was 3671. So that 50, 60 cent a gap that needed to be filled, and very quickly. And there it was sitting, the GDX sitting on the 200-period moving average. The GDXJ was underneath the 200-period moving average, showing weakness. And that was the same rule of thumb. It had to get into the gap. It was in this particular pattern, it's imperative after a gap down that within 2 to 3 bars, there's a close to start filling the gap, not a close below the low of the gap down bar. Well, it did everything wrong. It had a great opening on Friday. It looked really good. We in fact had, I wasn't prepared to pay much at all in terms of the price of the individual gold stock that we had. So we had one in the $6 range. I did not want to overspend. That doesn't make it cheap or expensive. It just means I'm trying to keep capital expenditure down at this particular point. We're trying to conserve as much cash as possible. So we had, and we got stopped out. I wasn't prepared to take any chances. I said, if this breaks down, I don't want to see it go into the 5s or anything like that. Just we're in and we're out, and we're out. And that's the only way I'm doing things right now for the traders, for people who are doing the longer term positions. I'm saying, hold your cash, be very selective on anything that you buy, unless I'm absolutely talking about it in a very convincing way that I'm looking. We have one that we've held. It's in a different area completely. I like it. It used to be the very best in the liquor business. They were the leaders, in fact. And then when they took over a cannabis company, I said, it's going to take them at least a year or so to digest and to get everything right in this particular sector. Well, they've had a very nice rally, and it's still doing okay, but it's one of the only ones in the cannabis area that I think is even worth talking about at this particular stage. So anyway, getting back to to gold, and the GLD is the gold trades 1/10 the price of spot gold. I usually use, if we're going into gold, I use another one that's 1/10 the price of the GLD. And I try to keep it there as well. Very selective, does the same percentage gains, rather than not put even more money into anything at this particular point. So we're out of the gold. I'm looking at it and I'm saying to myself, wow. If gold and silver, and the reason why I also wanted a very tight stop was silver was acting so badly. Look, silver's down at 22.41, down at 67 level, starting to get to an oversold condition, but we haven't got that yet. But look at the dollar. And I said, this is Basil's dollar because we've been long since 2018 at 90.07. We've ridden all the way up to 102.99 and all the way down to 89.21 and then all the way back to a new recovery high in the 103s. And I've treated it as an icon of American American economic power. Even though we're going through horrible times right now, it's still one of the best in the economic sphere. So what we're looking at here is gold's holding well. EUR USD made that left side, right side price time match. It was 2 weeks late, and the euro went down. It's trading 1.053 right now. I don't see it's showing any signs just yet of making a decent bottom. It's trying to carve out a bottom, but it hasn't. If you're looking at crude oil, let me just do this in case I forgot to do that. The crude oil is down 2.5. It's just in a trading range, holding okay. Now we're looking at, and one of the reasons I said to subscribe to both people, in fact, we were long from Thursday at the low with that fabulous move up. We took our gains, we took our profits on the move down on Friday, and this morning we're back along the time. I'll be back in a moment. Oh, the Dow is up 205.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Chart allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So a couple of things came up, and let me just do this right now. Within the context of one-to-one measurements, I like to do this. I like to go very conservatively. You can see here's the 1 minute chart of the E-mini. So from the low that was made at 4:09.8 this morning, that's 4:09.8. That is not the time. That is 4:09.8. That's at 9:40, about 9:41 this morning Eastern time. I go to the high that was made at a peak A, and then what I do is I measure that and then I take the low after the move down. I'm very conservative about that, and it gives a 1-to-1 expansion to the upside, and that takes you to about 41.53. We were there just a moment ago. Now we've gone to a leg D, and then what I do is once it breaks out, I go to the next. In this case, most obvious technical aspect, which is the 200-period moving average support, and that says it could go to 41.66. We're at 41.60 right now in leg D in the 1-minute chart. On the right here, you can see this is the Chapman Wave automated support resistance lines. Look at that 4097.75 low that was made in the technical. This is the red is automated Chapman Wave support, and the black is the resistance levels. And look what happened. It went to 409.75, and the actual price of the low was 4098.00. And then it ran up, and you can see all these different resistance points. Now it's expanded to the upside. So the question came in, two questions. One is you should really try to explain the TBT today. You would really be doing a service to everyone. Well, I think I've been about as thorough as anyone could ever be, talking about my triple yield chart, what we're looking at, why we're looking at it, what are the implications. I guess I can do it again. I thought I don't know how much clearer you can be. So now let me go to the next question came in. Could you explain any reason why you would go long in a market like this? Well, that's a really good question. And here's one of the reasons. One of the reasons is I'm only doing that with the Dow, which is the best index, and we've done that over and over and over again. We've had some really nice gains, just trading gains in the diamonds. I should have been short I should have stayed short from way back. Haven't done that. So I'm trying to do the long side, thinking that I was going to do it if Friday turned out to be after Thursday's spectacular action. Friday was just a minor pullback with a rally today going into maybe Monday, Tuesday. I would have been considering a short coming up in the Dow or one of the indexes over the next few days. But because of the action that I saw, because that selling, that the 1-to-1 that we saw from the lunchtime minus 400 area, where you almost doubled it to the down close, that said to me that a great deal, with the VIX index as well, it said to me a great deal of the selling pressure was done, and that unless the futures on Sunday night were down 35 to 42 points and followed through with selling pressure this morning, which would have given me a much better buy signal over the next day or two, based on the VIX index, all sorts of other things. I only want to treat these as trades, and that's all it is. Because now that the diamonds have gone over a certain level, we've got like a break even, at worst, a break even trade or a gain, and that's just the way I'm doing it. And I'm only doing it because for my subscribers, I have people who have long-term positions. I have people who use my work only as a guide because they think I've had a fairly good overall perspective on the markets over the last, at least while I'm here at TFNN for the last 20 years. And other people put in almost every trade. So it's a real mix. And some people use what I have and then use options or other ways of leveraging. And I can just say, I just do what I do. I try to do the best I can. And that said to me, if looking at the bigger picture, let me show you, since I was talking about the automated Chapman Wave methodology, only now, as I'm looking at it, has the support levels in the daily chart come in. Look, 33,180, there's a cyan colored right there. In the daily, 32,846. And the low today so far is 32,978. And here's the 10-minute chart, goes 32,861. We're at 33,185. And look at all these. For the first time, it wasn't even like that on the weekend. I've got a whole bunch of support levels in the automated, even the monthly chart. And that's just saying to me, I know the levels that if we break 32,500 on a closing basis, I have to be looking at quite a lot lower prices. I have to look at that 32,000. It's absolutely imperative to hold. But on a very short-term basis, there are enough signs to say, hey, we could get a bounce, and we could actually get an even stronger bounce because there is just so much disbelief. And I'm just treating it as a an inflection point to be used. Finally, look, the S&P came in at 4103.93 in my Chapman Wave automated support level. The low today is 4105, within 1 point of that. And now we're trying to rally. And I didn't have these at all Wednesday, Thursday, even Friday. I didn't have the support levels. So that's the reason why it was a big mistake on my part, because what I should have done is sent out to subscribers as the market was rallying to the close on Thursday. I should have said, let's flip, because all we can do is use some of our profits and just see where it goes to the downside, because I had nothing at the downside for supports. Now you've got them. Look at the QQQ, 123. QQQ trading, 311.66 is the Chapman Wave automated support level. The low today is 310.45. Couldn't get much closer than that, right? And finally, the weekly chart has got 305.69 and 288.70 on the monthly, and the 120-minute has a whole bunch, and we're trading at 316.73, up 3.52. Up 1.12%. IWM, I'll just do that. And look, IWM, I finally also got 183.09 as the Chapman Wave automated support level, and 184.10 is the level that we went to. Look at gold. Gold had, I can't remember, I'm guessing, so I'm not going to guess. I can't remember if it had this 1842.20 low as the cyan automated Chapman Wave support level. The low today so far is 1853, and we went to 1842.20. 1816 on the weekly chart. We've gone right below the 1880 on the 120-minute chart, and now we've got resistance at 1868.79 based on the 10-minute chart. So that's how I don't use these all the time. In fact, I kind of forget about them most of the time. But over the last 3 weeks, because some people have mentioned different techniques and different things to look at, I thought, you know what? I'll just keep this up as something, because I don't use it all the time in the shorter term. But lately I've been keeping it up just to say, let me just go through this every once in a while. It's really good, because I have many other indicators that I use. But there's your peak D. At the 1-to-1 level, look, there it is. Look, there's your 1-to-1 that I said was an extension, and we went to a peak D at the high today of 4165.75. Nice. Okay, so I'm just showing you some of the techniques that we use. Oh, talk about techniques. Well, a couple of things. I love the way Tommy Jr. puts together his fundamentals with the technicals, and he does it when he kicks off the show. It's called Market Kickoff. At 9 a.m. in the morning. It's really terrific to hear that all put together. But talking about technicals, I wanted to say that Larry Pesavento will be doing an all-day webinar 2 weeks' time, I believe it is. So check it out, front page of TFNN. Dow is up just a little. It's up 7.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I'm back, and we're looking at DE. I'm going to call this, just for now, I'm calling it D and E, but it really looks like it could be an A and B. We're looking at Valero Energy Market, manufacturer, marketer of transportation fuels and petrochemicals and power. I'm not sure I wrote that incorrectly. I mean, that's kind of what they do, but I'm not sure I used the correct wording there. And, okay, what we're looking at is within the context of the oil, this is oil, transportation fuels. I never ever remembered them as transportation. I always thought of them as an oil service, but I guess that's what it is. This is fantastic action because it looks like it wants to go to the left side high of June of 2018 at 126.98, and it's trading at 115. That's in the longer term, in a cup formation. So yes, Valero is acting extremely well, and I think the person who asked the question, now I've lost it, the person who asked the question, because it was in the den, actually owns it, I believe. If you own it, what I'm going to say is, I would on a particular, just on a smallish position, I would have a trading stop. Let it take you out for just a kind of a reward of having held it so long, and it's been so spectacular, going from under 60 to almost a double right now, 115. And the way I'm looking at it, because of the MACD and stochastic, this really looks like the start of a new move, AB rather than DE. But just for the conservative side, I'm calling it DE for now, and it's acting beautifully. It's up 4 at 4.24 at 115.72. Actually, that's just changed, but it's up in the 115s. I like it a lot. Let me just look at MRO, which is the one that we own for just a short while. Yeah, you see, many of these have had a big pullback. Valero is different because I guess the transportation is really important. So S&P in the den, I like it very much. If you are not in it, that is extremely tough because you could get in now, and you could even get in and have another 5. Maybe it goes, in this move, it goes right to the left side high in the 120s. And then within a very quick period, it could give it all back and take it. But on a very short-term basis, I'm just going to say, if you're not in, I know you have other oils, etc., I wouldn't get too carried away. You just say, you know what, I missed this one. If you are in it, hold it tight. I'd have a trading stop of about 2.5 to 3 points, just because of money management, going to almost an all-time high, recovery high in this case. And the general area, the sector itself is just a little bit toppy on a shorter term. So that's what I'm saying. Now, the other thing that I'm also looking at, that's Valero. Excuse me, I thought I'd avoid that sneeze. VLO is the symbol, 115.43 right now. The other way to do it is just say, you know what, this is a leader in its field. I like it very much. I'm just going to grab some right here at 115.44. I will put in, instead of having that trading stop, I will put in $1.50 or 2-point stop because it's only a trade. And if it even breaks into the 117s by Tuesday, I'll be riding it together because we don't know where it's going to stop. All the technicals are outstanding. Oh, I should have said, wait a minute. Yep, even the 120 minutes has just improved. Peak A, B. Is that a C? No, that's a C. And there's leg D coming up. So excellent action. So that's the only way I would do it. And this one you have to just treat as a trade if you're getting in fresh. This is short-term, near-term, we call it trading. That's all. Okay, next question. Okay, all right, so the TBT, let me show you something here. The TBT is the inverse. It's the ultra-short Lehman 20-year Treasury bond ETF. I still don't know why I did not get into it. I've been speaking about it for so long, but for subscribers to open and call, I didn't think on a percentage basis it was going to be, but that was dumb because obviously it's doing really, really well. And yeah, it is a refiner. Thank you, Zip. Yeah, that's what I thought it is. I don't know why I typed it in. I typed it in from the front page from when I Googled it. But it's a refiner, and it's a lead refiner. So in the TBT, you remember the pattern that we were looking at ABBV? Oops, ABB. Only the pattern, got nothing to do with the stock, which was part of Abbott Labs. And I said that up channel can break sharply. When it eventually breaks sharply, be careful, because if it pulls back and it takes out the high, the up channel low, that can be very difficult because it's telling you it's now changed course. And look what happened. It went from the 175 area to the 140 area on Friday in just a real short period of time. I'm not saying that's going to happen to TBT. What I was saying is, think of it this way. You've got your up channel, you've got your uptrend line, and it's broken out. How this deals with any pullback to the breakout level is going to be important. Well, it turned out that it became a beautiful cup formation, and now it's gone to a brand new, I'm calling this a leg C. I've got no choice. It's a leg C in the daily, which should go to a D. Buy modes go to Ds, at least Ds, and this is in a buy mode. And the weekly chart has just started a leg E to the upside, a very quick D to E. Is this going to be a Chapman instant restart? Oh, my goodness. If that's the case, then yields are going to scream to the upside. I'd rather be a little cautious and say the monthly chart is still very strong. The weekly chart is very strong in the bonds. And this is telling us, and I think the implied statement about the TBT is that, oh, my God, this is the end of the world. No, we've had rising yields before. We've done this before. And if you, I suppose I'll have to, no, I'll do it here. If you're looking at the history of the TBT, look, we've been here before. And look at this. We've been here from 2014. The TBT has been coming down, but it did have some pretty decent rallies to even higher than where we are right now. And we had a market that independently was going up because it had the Fed behind it. So that's really important. The Fed is really a key factor in this particular instance. So I'm just saying, as a technical tool, the TBT suggests that the TNX, here we go, this is the 10-year yield, also leg E in the daily, leg E in the weekly, and the monthly chart is even a better chart than the TBT. And that is going towards, oops, right there. 32.48 was the high in October. And it's trading right now with a high today of 29.92. And it's at 29.85 right now. So, yeah, we're looking at this and saying yields are going high. And that does impact the market in other ways. Okay, so, Basil, now hearing that you're not bullish on gold, no, I wasn't. I don't know. I'm sure I didn't do that on Thursday or Friday. I was talking about the way the GDX is acting and what it needed to do. And what I was saying is that we went along a gold stock, a very low-priced gold stock, only because it looked as if the dollar was about to, based on a leg D, about to have some digestive phase. And then I spoke about the euro breaking down, and that it was, we were going in, but we had to stop and we weren't going to mess around. No, it was two separate things. And not only that, Remember, I spoke about gold, and I thought that 1886 level would be very important as a support level at the 200-period moving average. So here we are down 49 at 1862. We've gone down to 1853. No. No, I'm not, and certainly I'm not taking any rifle shots at anything just to say, hey, can I grab things just because? No, we've got this cash position. I'm not messing around. You have to be looking at potential gains on trades.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so the IYT, which is the transportation index, is up 16 cents at 242.99. This is actually held, if you look at the monthly charts so far, it's held very well so far. But absolutely, the way that the support level, it's at 242, but that whole area of let's call it 238. Let's go underneath the support level. If 238 at any point, the IYT trades on a weekly basis and closes actually under 238, that is impactful. That's going to say that JETS, which is the U.S. airline global JETS ETF, at 2134, down 11 cents, trying to make a double bottom here. That's really important. And if you're trying to get tickets anywhere, you'll know that ticket prices are very, very high. And that's just telling you about the getting back to action aspect. Six flags we've had no success with. I've tried to buy a number of times. We've had pretty tight stops, and we keep getting stopped out. This is the one that should be moving. Six Flags Entertainment. I don't care whether they a lousy business. People should be flocking to there, and the price of the stock says, "Are you kidding? Going from 43 to 38? This is not good." It should be up in the 45 to 47 area. So something's not quite right here. It could be the price of gas, but I would suspect, so you go for a day less or whatever it is, but you get there because you want to get out and you want to drive, you don't want to fly. So something's not right. And that's just telling me I can't go to Disney because Disney's media is just completely different. I mean, this has gone almost straight down from the 190 level down to 112. Right here is where it should start to try to find some support. We'll see what happens, but it's a different area completely. So I'm just looking at that. I'm looking at things like Jacobs Engineering, which we've liked for so long, which is also making this little H pattern. It's at 138.89. We don't have a position here, but look how it's held so well. This is Jacobs Construction Management, etc., scientific research, testing, holding in the higher range. But it's so difficult to find anything. I went to UNH before. Look at this. UNH is making a short-term top, pulling back. So even the areas that are working are saying, we're starting to struggle. Waste management, I've not looked at that for ages. Waste management is near the all-time step. Okay, what happened there? Waste management is 162. Anyway, have a wonderful rest of the day. Stay tuned for a great program coming up. Larry